Good morning and thanks for your time this morning. As part of the role of MLA, we offer a market information service, and a lot of what I'm presenting today is part of our market forecasting that we do throughout the year. And where I've made it possible, I've tried to relate it as much as possible to the live export industry. But I've also going to finish on areas where you can access this information on an ongoing basis, because the market can change quite a bit, and it's important that you keep up to date with the latest trends. Today I want to talk about three main topics. Firstly, I want to look at the Australian sheep flock, and in particular the WA sheep flock. And then I want to look at global sheep meat demand growth around the world. I want to look at specifically the cattle herd, and as we move into this post-drought recovery, and I want to look at the trends across Australia, because it's not going to be a consistent recovery north, south, east, west. And I want to look at where the cattle are at the moment and where we're expecting them to be over the next few years. Then I want to finish on our developing markets. There's huge growth potential out there for Australian beef and cattle and sheep meat, but we're not alone. There's a lot of competition out there, particularly from the likes of the US, Brazil and India. So firstly, just quickly on the weather, and this has been a huge driver of supply across both sheep and cattle over the past few years. That huge drought across 13 through 15 took a lot of cattle and sheep out of the system. 2016 wasn't too bad. Across Australia, it was mostly average to above average rainfall, but for parts like Queensland, this really wasn't enough to really kickstart that herd rebuild that the state really needs. 2017 hasn't been all that flash. Some parts have had okay seasons, probably most notably Victoria, but a lot of the countries had pretty much below average or average rainfall at best. Of late, I suppose we've seen a bit of rain in New South Wales and Queensland, but for most of the year it's been pretty dry. Then looking at the forecast, the next 3 months are fairly neutral, or slightly above or below depending on where you are. But the BOM are still forecasting a 50% chance of a La Nina forming over this summer. So I suppose we've seen a huge shift in weather over the past few years, and it's really dictated the supplies that have come out of our system. And the forecast for the short term, I suppose, is fairly neutral. And this feeds into our forecasts over the next few years. Firstly, on sheep meat, and there's been huge growth, particularly in the developing world, for sheep meat consumption. A lot of this is met by domestic production in each country, but also a lot of imports feed into this consumption growth, and we've seen that as a case in point with China over the past 5 or so years. And going forward, the FAO and OECD are forecasting the developing world to continue to drive this consumption growth over the next 10 years, and particularly in markets like Asia, but also the Middle East, contributing a lot to this growth. So the demand prospects are pretty positive, but we are limited by what we can actually produce, and we've seen huge shifts in the national sheep flock over the past couple of decades. However, over the past 7 or so years, we've entered a period of relative stability. We saw a bit of growth in the lead up to 13 in those couple of wet years, but then the flock did dip below that 70 million mark at the end of last year. But looking forward, we're expecting a bit of a recovery, and that's really on the back of survey responses of sheep producers around Australia and them reacting to those really strong wool and mutton and lamb prices over the past 12 months. But we are constrained by what we can expand, firstly on weather, but also with the infrastructure that's been taken out of the industry and producers that have left. It will cost a lot, and prices will have to remain fairly high to really see these numbers increase significantly. So this is the national flock, but in terms of WA, it's been a fairly similar trend. And this is particularly important for the live export industry because now the bulk of exports come out of the Western Australian sheep flock. So this green line here is the WA sheep flock over that same period. We did see a bit of a recovery in the lead up to 2013, but it did come back afterwards in those dry southern years. And this is the single biggest driver in terms of what we can actually export on a boat. So over this period, live exports out of the West have pretty much halved from about 4 million in the late 90s and early 2000s, now around that 2 million head mark. and it's purely because we don't have the supply of surplus merino wethers to export. But it's not just the case for live exports as well. The mutton kills come back in the west by a similar degree, so it's an overall issue around supply. But over this time, we have seen a transition in the sheep flock. More so than ever, we're producing a lot more prime lamb, so much so that last year's Western Australian lamb crop was at a record level. So even off an all-time low base, we can still produce a lot of prime lamb. But overall, you can see the number of head we're turning off this system is drastically lower than what we had in those 2000s. For the sheep meat side, though, this is partly mitigated by ever-increasing carcass weights at both the sheep and lamb level. So overall, we are limited by the amount of supply that we can produce. And this is really driving prices at the moment. So here we've got the Western and Eastern trade lamb indicators, and pretty much since 2013 we've seen pretty good price rises. But it's not just Australia. Here we've got the Kiwi 17 kilo trade lamb indicator as well. And they've also followed a fairly similar trend. Between the years, they follow their own seasonality, but overall, both countries, which are the two key lamb suppliers to the world, have followed this similar trend, and it's really coincided with the emergence of China in 2013 as a new buyer on the global marketplace. So lamb prices are at close to record levels, and it's also the case in live export wether prices too. This is the sale yard live export wether in the west. And we saw that previous price surge in the lead up to 2011 when we saw about 500,000 head lost in the western sheep flock. We hit that dry spell over those few years, but subsequently we've seen a resurgence in export prices. So across both sheep and lambs, we're at this level where we haven't really played much in before. But that is also problematic because we've ultimately got a very limited pool of surplus sheep, and those sheep are very expensive. So in terms of our export markets, it's the case that a lot of our key countries have been priced out of the market. And the Middle East is our biggest region we export to, but there's a huge spread in incomes across this region. So given that we have such expensive livestock, it's no surprise that the top 4 per capita most wealthy countries in the region now account for about 80% of our sheep exports. This is GDP per capita in green in 2017 and the forecast for 2021. So there is good income growth prospects in this region, particularly Qatar. And that's also been supported over the past couple of years by the big infrastructure projects in this country and in the lead up to the World Cup in 2022. And a lot of the additional migrant labour that's come into the country to build these projects. So ultimately we are limited by supply in what we can export on a boat in terms of sheep. But we have seen a bit of a transition and ability to adapt to meet this growing demand in the Middle East for sheep meat through what we can actually send. So these red bars here are the annual live export trade to the Middle East. And in green bars is the equivalent growth in the bag trade, whole carcass trade to the Middle East. And we've seen this growth in carcasses, mostly air freighted, particularly out of the West, directly into the Middle East. And it's somewhat compensated or complemented that demand in the region. It's not necessarily replacing the same animals through a different pathway, because a lot of these carcass trade components are made up of lambs, and a lot are coming out of the East Coast as well. And I don't think it's necessarily going to mean that we can replace the live export trade, because so many customers in these markets require a freshly slaughtered animal, and they particularly want those at religious festival times of the year. Lastly, on sheep, I just wanted to touch on China, and we've seen huge growth in the sheep meat trade to China over the past few years, which is dominated by us and New Zealand. China is the biggest world producer in sheep meat. They've got the biggest flock, but they've just been unable to produce enough to meet their local demand. So since 2012, we've seen a huge growth in imports in sheep meat into this country. So the new protocol signed between the Australian and Chinese governments is promising for the development of the sheep slaughter and feed trade. And the demand is there. They want sheep meat, but I suppose it's going to be up to the market to decide whether that's on a boat or in a box. On to beef and cattle. We've seen huge changes in the national herd over the past few years. We hit drought in 13, 14 and 15 and effectively took an extra 2.5 million head of cattle off the top of the national herd. In 2016, we anticipate the herd would have bottomed out, and we've seen some signs that producers are expanding their local herds, but there's huge differences across regions in Australia. There's a big deficit of cattle in Queensland still, which I'll touch on next, while parts of the southeast are providing some signs of a recovery. But if we are able to assume average seasonal conditions, and that is a pretty a big assumption given Australia's weather volatility, but if we assume those conditions, we are expecting a recovery over the next 5 years. But the decline over the past few years has not been universal at all. So this is the state-by-state decline in the female beef herd between 2013 and 2016. So firstly, it's interesting to see that the West and the Territory have actually increased a little bit over this period, but the big deficits are in Queensland. We've got about a shortage of 600,000 head of female cattle in this state, and we're yet to see really strong signals that they're looking to rebuild. Yes, female kill in the state's back a little bit, but overall, we're not at levels that we've seen in previous herd rebuild phases. We haven't got levels that we saw in 11 and 12 when we saw that huge growth in the cattle herd. The southeast has had some signs of a recovery. Between 15 and 16, New South Wales actually grew a little bit in terms of overall cattle numbers, but given the dry winter they've had this year and pretty tough year overall, that recovery is probably stalled slightly. Well, the rest of the southeast are showing signs of a recovery with lower female kill numbers overall. But the main point here, I think, to make is that there's a huge deficit of cattle in Queensland still, particularly of breeder females. And if we do see a really strong break in the state this summer or next year, there will be extremely strong demand for breeder cattle or storing young cattle in that state. Particularly if the likes of Indonesia is also trying to pull breeder cattle out of the north. Another way we can break down the herd is on a regional basis, and this is important for the live trade to China. So here we've got the country split in two, depending on their blue tongue zone status. So in the blue here, we've got blue tongue free zone, and in the north, in the yellow, that's where the blue tongue zone is. So we can cut these regions up based on their blue tongue status. And overall, there's still quite a few cattle in the south that would be eligible or more suitable for the trade to China. However, once we rule out the bulk of Queensland, which is about half the beef cattle herd, and then parts of the Territory, Kimberley and coastal New South Wales, we are left with about 35% of the herd being south of this line. However, that's still about 8 million head of cattle or more, and that's still enough to base a trade of export cattle to China off. So based off our herd forecast and the availability of cattle over the next few years, we've got a live export forecast. But the big thing to note here is these 3 years in 13, 14 and 15, 14, 15 and 16, were exceptional years. They were in a period where we'd just come through a huge herd rebuild and we had a surplus of cattle that we could quickly liquidate. Add to that, we also had the Vietnam market open and we saw an explosion of cattle to Vietnam as well. So far this year, we've seen a fairly big contraction in live export cattle numbers. We saw a similar contraction the year prior for slaughter cattle. But overall, we are expecting numbers to return in the longer run as that herd recovery comes through. I think the big if will be if we see a herd rebuild in Queensland, that'll dictate the rate of this recovery, and it could be faster or slower. But overall, if we ignore those 3 exceptional years, we are returning to numbers that we've typically seen over the past decade or so. So what's all this mean for pricing? So here we have three indicators for Australia. The dark green is the Darwin export feeder steer indicator. And then in the light green, we've got the Queensland domestic feedlot feeder indicator and also the one for Victoria. So right across Australia, north-south, we've seen this huge lift in pricing. And they've correlated reasonably well, but we have seen periods where they've diverged. But pretty much between 13 and 16, we've seen a doubling of cattle prices across Australia. They've come back a little bit over the past 6 months in the south, but they've kicked up a little bit more over the past few weeks with that bit of rain. The other thing to point out here is we did see a divergence in the past 6 months where live export prices remained fairly stable with where they started the year, while the southern indicators started to ease off. But they've again started to close up with the south catching up to the north. So overall, I'll touch on this in a bit more detail next, but overall, selling expensive cattle to the world market is problematic, especially at a time when the global marketplace has cooled off a little bit. And there are a range of challenges in our export markets, but I suppose the fundamentals for demand growth are out there. So one measure of demand growth for beef that we consider is looking at the amount of consumers that can actually firstly afford beef, and in particular, given the price of Australian cattle, can afford Australian beef or cattle. So one good metric we use is incomes or household incomes in excess of $35,000 a year. Once you get past this point, you can consider start purchasing beef. And there are really strong growth prospects in Asia in particular that are going to put us in a good stead to soak up some of the additional beef on the global market. So for instance, China is expected to double the number of households in this income bracket to 16 million, and similar trend across most of Southeast Asia, where these regions are expected to pretty much double, particularly the likes of Indonesia, Malaysia, Vietnam, and the Philippines. So overall, this income group is going to increase to about 7 million head, which is pretty much double of where we currently stand. And it's not just the Southeast Asian markets, also MENA. They've also expected to increase quite considerably over the next few years. So overall, there is this demand growth that we're seeing driven by income. However, there are a range of challenges for us, and these have particularly increased over the past 2 years. So while we've had a cattle market that's been supported by tight supply, the global market has shifted, and that's primarily been underpinned by the US. So the last couple of years, the US has been increasing production, and they are the world's biggest producer, so this has ripple effects around global markets. And more so with box beef and less so with cattle, but they are exporting more and more product, and next year they're expected to increase exports by about 4%. And this is particularly problematic in markets like Japan and Korea, where we currently send a lot of boxed beef. Another major exporter on the global market is India. They export a lot of Indian buffalo meat, and we've seen over the past few years huge growth in exports coming out of India. This is primarily targeting cheaper commodity markets, mainly in Southeast Asia and the Middle East, but we do have some overlap with our products, particularly in terms of live export cattle. So you can see here their biggest markets are Vietnam. About 80% of that does get re-exported to China, but also the Middle East, Malaysia, and we've seen growth in product going to Indonesia. And it doesn't look like much, but this blip of exports can account for about 370,000 head of cattle in the market, or it's about 10% of the total beef supply. That's not necessarily going to replace imported feeder cattle. It's also competing with their own local cattle as well. Also, in terms of Indonesia and Indian buffalo, we do need to be mindful of where we are sitting at a price point. We've seen cattle prices out of Australia double over the past 3 years, but the local wet market price in Jakarta hasn't increased by the same magnitude. So this does make it difficult for trading conditions. We just haven't seen the costs passed on into Indonesia. And it's particularly the case when we can see Indian buffalo entering the market at an even cheaper rate as well. Lastly, from a competitor point of view, Brazil's the fourth, not the fourth, but one of the other four major exporters in the world of beef. And typically we haven't had a huge amount of overlap in terms of cattle or beef exports with Brazil. But since around 2013, we've seen a huge increase in their product entering Hong Kong and China, which is this blue wedge in this chart here. Previously to this, we didn't operate too much in the same markets. They sent a lot of product to Russia and Venezuela, but both those countries are now in some sort of economic turmoil, mainly due to oil prices or their own poor economic conditions. But they've now pushed more product into the likes of China, and they've overtaken us as the global, as the leading supplier, alongside Uruguay. So where does this leave price of Australian cattle? We've gone through this huge transition in supplies available coming through, and that's really supported the market up until late. However, we do just need to be mindful that there's a range of challenges in some of our key markets, and there's a lot more competition out there, and the global market has cooled off a little bit from a couple of years ago. So when those supplies do return, we do need to be mindful that these challenges are there. I suppose the wild card for the Australian cattle market will be the timing of that Queensland break, and if they do get a really good wet season that allows them to suddenly begin that rebuild process, and the speed of which could push the cattle market in a range of directions. I've touched on a lot this morning, and there's a lot to keep on top of, so I'd encourage you to subscribe to a couple of MLA publications. Firstly, we've got the Prices and Markets newsletter, which is a weekly publication with the latest trends and data. And secondly, there's the Global Markets Update, which offers a monthly publication of trends in some of our key export markets. So I suppose in conclusion, supplies overall are fairly tight, both sheep and cattle. The flocks have gone through a contraction, and the herds have gone through a contraction as well. We are expecting a recovery in the sheep flock over the next couple of years, but no significant recovery. We are also expecting a recovery in the cattle herd over the next few years, but a lot of that will depend on the seasons, particularly in Queensland. We know there's really strong demand for our product overseas, but we are faced with a range of challenges in some of those markets, and we're not the only one in the game. So that's all from me. Thank you for your time.